machen wir.
So, hello and welcome to our presentation, Why Stick with Only One Brand? The Rise of Multi-Brand Franchising in Europe. I have Matthias Kern from Amrest Pizza with me, Pizza Hut, who's going to present you the following presentation in the next 45 minutes.
Okay. Hello, everybody. Happy to be here. Hopefully you have a great show in the first online show in Frankfurt. Would love to have you all in person, but yeah, this year is everything different. So I've been asked to talk a little bit about why we stick with one brand and what has been changed in the last couple of years, especially in Europe, in terms of more and more companies go to multi-brand. But oops. Okay. Now we have the first funny technical problem. There we go. So first, a little bit about the guys in front of you. For me, it's the first time doing this in a online modus. So just a little bit about myself. So I'm, as you can see, a pretty passionate guy, especially when it comes to QSR business and franchising, which I'm doing for now almost more than 26 years, which surprised me all the time because I'm not feeling that old already. So as many of the people in the industry, I have started in this industry in 1994 with McDonald's. Spent there a couple of years, moved to the oldest QSR concept in Germany, which is Nordsee. Very impressive concept. But then I was asked in '99 to start up KFC in Germany, which we did pretty so successfully at the beginning, but now moved the whole company over the years to be a big part on the map of Germany. So I think everybody traveling to Germany can now see the presence of KFC, which not to say came boring for a while, but starting up is something which I love to do. And so in 2011, after a long time with Yum! Brands and KFC, I started with Domino's to put Domino's Pizza on the map in Germany, which was in 2011, with the first stores in Berlin and Aachen. So we made the first baby steps in terms of food delivery in Germany, which was 2011, not as common as now this year with the impact of COVID. And with the takeover of Joey's Pizza in 2015, I moved to Alamar Foods, made a little sidestep to a different country, spent a couple of months in Dubai, and then moved to Saudi Arabia. And I was running Domino's Pizza in Saudi Arabia, which was, to be honest, a very great experience, completely different to what we do in Europe. But then I was loved to come back to Germany, which I did then in 2016, joined Amrest, first doing development for KFC, Starbucks, and Pizza Hut, and then 1 year later, in 2017, late 2017, I became the brand president of Pizza Hut for Amrest in Germany. So this in a nutshell about the person you are talking to in the moment. I mentioned Amrest, very busy chart, but this is, I think, shows the best what a multi-brand company long-term could look like. So everything started on the bottom left. You can see in 1993 in Wrocław with the first Pizza Hut in Poland. Then pretty fast after 2 years, the first KFC has been added to the Amrest portfolio. And then rapid growth started with these two brands. Then in 2007, Amrest returned Burger King to the Polish market. And you can already see how fast this can develop, adding more and more brands, because in 2008, Starbucks came. The first Starbucks opened in Poland for Amrest. And then we went first time to Western Europe, acquiring a concept La Tagliatella, which is operating more than 200 Italian star restaurants, mainly in Spain. And then only 1 year later, it became that we bought a company in China, which is running a concept, Blue Frog, which is an American bar and grill concept, and Cap, which is a bistro for what you need over the whole day. And finally, after more acquisitions with the other brands, like the in 2018 Sushi Shop, and then also the master franchises for Pizza Hut France, for Pizza Hut Germany, AmRest finally grew in the moment to a company which operates more than 2,330 stores in 26 countries, which is one of the biggest players now in Europe in the restaurant industry. But if you look back, it all started with one Pizza Hut in Wrocław in 1993. That's how multi-brand can be. Coming down to the German market pretty quick, where I'm responsible for. So Pizza Hut is in Germany since 1983. We operate currently 85 stores in the German market. We have just 20 franchisees, so we have a lot of multi-brand, multi-unit franchisees operating more than 2-3 units. The biggest franchisee is operating 14 units. Some fun facts: we're selling more than 4 million pizzas a year, which is the equivalent of 11,000 pizzas every day. And what most of the people don't know is that we are one of the best markets in the world for cheesy crust, because we sell more than 1 million cheesy crust pizzas, which has been invented 25 years ago from Pizza Hut, only in Germany. On the right-hand side, you can see our sales development since AmRest has taken over the master franchise in 2019. So we did a pretty aggressive sales development, which is pretty much based on the same store numbers. So most of what you can see is same store sales level. And of course, the forecast for 2020 with the COVID impact is not as pretty as it should be. But you can also see that we have maintained a certain level of sales, even in this very, very complicated environment we are in. And one back, sorry for that. So quick store portfolio, we have, what you can see is we have 77% classic dine-in restaurant business, very small delivery business before, and some express units, and the same for combined units we have. On Pizza Hut Germany, the COVID change, I think this is something everybody is keen to know and is discussing, and especially in this Franchise Expo online edition this year. So what you can see here, we had in February 2020, we were only running 11 delivery stores. With the COVID impact and the first shutdown, we started from our side as the franchisor a big program with our existing franchisees to move as much as we can from the classic dine-in and takeaway to more delivery. So today we are at 66 already. It's an older number from last week. So with 66 stores are delivering now in Germany, our delivery sales share has moved from 9% to 20%, and it's growing pretty much every week. And of course, dine-in sales has dropped down a little bit, and takeout went up. And on the low line, you can see the importance of aggregator like Lieferando, Takeaway.com, where we have seen a huge jump in orders. So we are, we can say, pretty good prepared for the actual lockdown and what we will facing for winter. And that's actually for Pizza Germany. So, but now back to what we wanted to talk about today. This is the rise of multi-brand franchising. So, and the question is, why is it such an important topic, or something people could be interested in to see? So I will show you in the last couple of minutes something about my experience over the last 26 years, how franchising in Europe has been developed. So, okay, so first looking back a little bit to former times. So you can see here some of the people might know the movie, or most of you probably might know the movie. So if Marty would have used his time machine going forward to 2020, he would have discovered that we have a lot of multi-brand operations running in the country. So why we have this, why he is surprised about this, Marty comes from 85 with his time machine. So in the 80s, first of all, franchising was something which was barely known in Germany. And even big franchisors like McDonald's or Burger King, they were trying to convince their big US franchisees or US franchisees to leave the US and open stores in Germany. So there's, as an example, in McDonald's, there was a story that one big franchisee in the US has been asked to get the master franchise for North Rhine-Westphalia, so for the whole NRW. He refused to do it, which he will probably regret looking back today, where McDonald's only in NRW is running about $1 billion in sales. And this was what I was saying in the 80s. And there were also some couple of other rules in most of the QSR businesses, franchise brands. First thing was you were not allowed to operate another brand. Some businesses were telling you you are not allowed to run any other business, which is completely different from today. And for instance, the big franchisors like Mac those days, they were running a split of 60% franchise stores and 40% company stores, so own operated stores. So they had, as an example, McDonald's had 5 headquarters in Germany in the market, running own company operated stores. And there was another rule those days until in the 90s, that you couldn't have more than 6 McDonald's stores as a single franchisee. So as a franchisee, so it was restricted from the franchisor that you couldn't run more stores. So in the 90s, it became more franchising became more known. Growth was accelerating, especially the big brands were accelerating their growth in the 90s very rapidly. So McDonald's mid of 90s, when I was there, opened 100 units per year. The best year was 125 new openings only in Germany. And in 1994, Pepsi decided to form pretty much one of the first multi-brand restaurant companies, which was called PepsiCo Restaurants, pretty much to protect their soft drink business because Coca-Cola was moving rapidly into the market. Then the other thing we could recognize in McDonald's, suddenly also in the stores, other brands appeared. They were also in the menu, some other brand names, etc. appeared. And there was this rule that there was strictly forbidden on a McDonald's property to have any other logo. Was step by step being broken or being or disappearing. Today it's pretty normal that you can buy a McFlurry with Kit Kat or whatever. I can tell you in the 90s it was not as easy as today. Then in 1997, PepsiCo did the spin-off. The first, or one of the biggest, or the biggest multi-brand company was founded, first named Tricon, today named Yum, with KFC, Pizza Hut, and Taco Bell those days as the free brands. And also the iconic brand from Germany, Nordsee, was acquired by Apax Partners from Unilever. That was one of the first, let's say, acquisitions when a venture capital or a private equity organization stepped into the food business, the QSR business, figuring out that this is something they might invest to and turn into good yields by bringing them to the stock exchange or selling them to other portfolios. And so you can already see that there's a trend started in the 90s. So in the 2000s, we could see the first big signs of the coming asset-light strategies. What means asset-light strategies? That means that the big franchisors started to move more and more to a strategy that they were not operating own equity stores anymore. And they saw that the paybacks for investing in these companies was a light asset strategy, and master franchises, etc., was pretty attractive to investors, especially also to aggressive venture capital investors. So what does this mean? You saw the reaction of own operated stores, which came along with strong reduction of G&A costs. Then they focusing only on developing the brand in terms of marketing, brand image, etc. But the operational business will be given to only the franchisees to run their stores in the field. And what other we could see in the early 2000s is that established big franchisees, especially like big franchisees from McDonald's or other big brands who already has developed with the McDonald's brand pretty heavily. They started to look into other brands or even develop own brands like Vapiano or other brands we know today in the German market. And so that's pretty much started a much wider view on how can we operate more brands than just one brand with our platform we have already just established. Sorry. So also later in the 2000s and closer to where we are today, we could see the technology impact. If you look as an example, as to the Domino's, they are so far the leading company when it comes to using technology for delivering pizzas worldwide effectively and introducing more and more AI developments, etc., to make this business even more attractive. Or you can say they call themselves a technology company delivering pizzas. And if you're looking back in the 80s, McDonald's was told a real estate company making burgers. So today you have technology companies, which is the future's delivering all kinds of foods. And what you could also realize in the last couple of years, that the concentration of several brands to big players like Yum or RBI or Inspire has started to accelerate very much in the last couple of years, which you can see on this chart, which is the QSR world today, pretty much controlled by almost 10 companies, which control most of the well-known brands we all know here in Germany. For instance, Yum Brands with KFC, Pizza Hut, and Taco Bell, but also Restaurant Brand International with Burger King and Popeyes and Tim Hortons. And last week we saw the last big deal coming up, that Inspire Brands is going to take over Dunkin' Donuts to integrate into their portfolio, which moves them pretty much overnight, I think, to number 3 or 4 when it comes to restaurant count. So we have Yum Brands with more than 50,000 units. You have McDonald's with almost 40,000 units, and they are, after this deal, will run 31,000 units in the world. So this has been one big driver of thinking more multi-brand. So, and of course, what's the advantage to be multi-brand? So if you compare a little bit the ups and downs, or the from single versus multi-brand, clearly a single brand operation has the big advantage that you can concentrate only on one brand. You have 100% brand focused culture. So So everybody in the organization thinks like the brand, acts like the brand, etc. There's no other thing you can think about. A good example is again McDonald's for that. You will always identify McDonald's people pretty easily, even if you work not anymore at McDonald's. You will clearly understand who they are, because the brand DNA is infused into all employees in all areas of the organization, which is a big strength. And of course, if you have only one brand, you have a very deep understanding and a very high level of experience when it comes to the P&L, the dynamics, and to the success factors of the brand. And there's only just one franchisor you need to talk to. So on the downside of having a single brand operation, of course, you are first thing is the risk and the sensitivity for possible crisis. We have seen it in the late 90s with the BSE or with the bird flu, but also there can be other things impacting. If you're not in the food business, probably other impacts if you only run one single brand. You have always the risk that if in this sector is something happening, you have nothing to compensate with. But also going into the so-called support functions, when you grow your brand, you have always the challenge of to leverage your G&A costs in the best way. So that means you need to see what's your development pace, and either you are overloading your support functions, or if you have too many people, you are not effectively using your support functions because you are sometimes limited to a territory, to real estate availability, etc. And also you can be very limited in your asset strategy. So if you have a brand which is, as an example, only operating drive-thrus and have no concept for express or delivery, you are pretty regulated or restricted to that, and that can, depending on the real estate market, also limit your growth, and also that same way makes the support functions not as optimal as they should work. And the last point here is the leverage you could have in your platforms like IT, digital, or supply chain management infrastructure is easier to manage with a multi-brand operation than with a single brand operation, depending on your development pace. On the other side, on the right-hand side, if you think about multi-brand, you of course can risk balance your portfolio. If you add different brands, if you have different day parts, dine-in, drive-through, or delivery, etc. So this all could balance your portfolio against impacts you have not under control. And the other thing is you probably have a better leverage of your support functions, because if you growing with more brands, or if you're adding another brand, if you are not so big, then of course your support functions can easily adapt the other brand, and you have, if the one brand grows slower, the other brand grows faster, you still can balance your overhead better than if you have just one single brand operating. The other hand, if you have already invested in infrastructure like IT, digital, SCM, taking on another brand can make these investments more profitable, because the platforms usually are, especially in IT and digital, and even in SCM, are pretty much similar. It's just some bits and pieces you need to change. And so the platform is, or the investment in one of those platforms can be leveraged by adding another brand. As mentioned on the other side before, if you pick your portfolio wisely and add brands that you can also be more flexible in your asset strategy. For instance, a brand which fits to better to shopping malls or better to public transportation hubs, that will also make sure that your assets, you can leverage your assets better, because sometimes a brand works in that asset, or you can share assets, etc. So that makes it much more easier. And of course, the knowledge sharing between the brands is always a good upside. And you still have should have brand focused leadership. The downside, of course, is that the implementation of the company culture is much more complex in a multi-brand operation than in just a single brand operation. Some support functions, as an example, as in finance, they are not as specialized as they are usually in single brand operations. So if you have people who are working since 5 or 10 years for that one brand, they exactly know the dynamics in the P&L. They understand the KPIs, and of course the leverage is if you connect some dots. It makes it a little bit more complex because sometimes you need to think cross-brand a little bit more different than just in a single brand. And also, you probably have more than one franchisor, like we have in AmRest. So you are in negotiations all the time with different franchisors, with sometimes different interests, which can make this, in terms of management, more complex than in a single brand situation. So, the multi-brand structure. I talked a lot about support functions. So what you usually do is you have the shared service functions, which should be normally the finance, legal, IT, customer care, fleet management, digital, supply chain, the development function, and the HR function. All these functions are able to support different brands. And in the single brands, it doesn't matter how many brands you are adding to your portfolio, you should have a brand-focused leadership when it comes to operations, to training, and to marketing. And with that structure, if you imagine you have just one brand with the support functions, you can just leverage these support functions much better. Especially also the platforms of IT, supply chain, digital, and even in development, the human resources, by adding brands fitting to your portfolio. So that's the biggest leverage you have, that your G&A costs for the whole company usually are lower than if you have a single brand operation. So okay, so before you're taking on another brand, you probably will not ask these two guys, not sure, but probably you ask yourself a few questions to double check if the brand or what you're looking for. And what I could say, the last question, and it's not even here on the chart, is the money question. So is this investment 5 times? Is it 5 times EBIT? Is it 4 times EBIT? Whatever. So that shouldn't be the driving factor for taking on another brand, because that normally becomes then a catastrophe if you only look at the financials. So the first thing you do is you look at yourself. So what are my support functions doing? Are they overstretched? Are they on risk of becoming inefficient? So is there anything we can do? Is our development pace big enough, or do we need, if we hire some more people in our support functions, is that really the right stuffing? Can we find enough locations with our single brand, or is there anything where we are limited in areas by the franchisor? For instance, if the franchisor has given you a certain area and you cannot work develop stores fast enough in that area, you might think about some leverages you can look for. And the same applies not for only for people, the same applies also for your platforms and systems. So if you have already invested in IT systems, in digital systems, web shops, training systems, etc., usually those systems, ERP systems as well, usually those systems are pretty much unlimited in terms of numbers. Yeah. So if you have established all this stuff like a web shop, like an ERP system, like online learning, etc., but your single brand operation is not developing fast enough, you can leverage all these platforms and systems by taking on another brand. And if this investment has already been taken, you probably should look for something which comes with it to help to make these systems more efficient. And then if you have identified yourself that you are in your structure and so on able to take on another brand, the question would be is what fits best to your portfolio. And with coming back to the slides before where we talked about risk balance, asset optimization, and of course the asset strategy you can do. Probably the other brand is trading in completely different day parts or have offers which should easily be added to what you are doing already in the moment. So if you think about, if you have your group of targets or brands to add, the next question I would ask myself is, what's the company culture in the targeted brand like? So are you sharing the same values? What's about the leadership styles in the other organization, or even the leadership style and the value of the master franchisor or of the franchisor? Mindset, goals, is all this kind of comparable to what you are doing in your organization, or is it completely different? So if you connect the dots and if you see there are some similarities, like in the big fast food brands, if you would look into Yum values or RBI values or other big fast food brands, the values are pretty much the same. It's just they're just named differently, but it all comes down to the same thing. So combining these brands is easier than having something else, which brings us to the operational model. Yeah. So if your operational model is similar to an operational model of the brand you are looking for to integrate into your organization, that's then probably something you should go for. So that means if you are a QSR brand, taking on a Michelin star restaurant would probably not be a good idea. Same thing if you are focusing on an extremely value fashion brand. Not sure if you could integrate a high-end fashion brand into your organization that easily. So the operational system, the operational platform or the operational model should be showing a lot of similarities to make the integration easier. Then next look is into what about the geographical challenges? Is this manageable from a geographical standpoint? If you run one store in Flensburg and if you run the other store in Bavaria, you probably should think about it. And also, if it comes bigger, it's when it comes to different country cultures, is my operational, is my brand and able to perform the same way in another country using the same operational platform, etc. So that's something which needs to be looked at pretty critically, because geographical stretches often have killed the development of bigger brands, what we have seen in the last couple of years. Big thing, of course, supply chain management. If you can add another brand which would very much leverage your supply chain, is a pretty good thing to go. So that means if you run a QSR business, being expert TV seller or whatever, probably not a good idea, because your supply chain will not be leveraged as it can be. Nothing can be can be done in that way. So if you have a food supply chain, you should stay with food, from my perspective. And then a big thing to look at, especially if you are going to acquire not only the brand but also a company with it, is what about the G&A leverage opportunity? Because what you mainly see in especially in refranchise scenarios, when the mother brands or the franchisors have run own stores, usually the G&A is very high compared to what franchise organizations are carrying on G&A. And if this is the case, it's a clear sign that this brand is made for your organization, because you can easily realize very fast positive G&A leverages. And last but not least, we have of what you need to look pretty deep into is the integration. Yeah. So how fast can an additional brand be adapted to the existing systems? So what could be helpful if you're already running an operation in the country? Just implementing another brand or introducing another brand in the country where you have already built up a portfolio could really soften the greenfield approach, because if you go from scratch, it's most of the time very complicated. If you can soften that greenfields approach by using existing platforms and systems, often franchisors from abroad are happy to accept you as a franchise or master franchisee of choice, because they see that you have already the organization and the structure to be successful in the market. So last but not least, and I think we have a few minutes left, once you have identified and all this, if you have asked yourself all the right questions, and you have identified the new brand or the new organization, then you need to integrate it into your multi-brand operation, which I can only tell you is something, it's a full-time job somebody should do. So don't think you can just take the new brand and throw it into your organization and then everything will be fine. It's pretty much a job for, depending on the size, for a person who is pretty much very disciplined, structured, and who is following up with all the different leaders of the departments, of the brands, etc., to make sure that the new kid on the block is integrated the best way into the company. And that can take a year, that can take 2 years, but investing in a person who has experience with that and consistently following up with all functions in the organization to make sure that the new brand is integrated in the best way will really help you. If you do this as a part-time job for somebody, it can probably be that you will sell the brand pretty fast again, because the integration of this was not successful. We could talk about this integration for another hour, but unfortunately, I think we are already 40 minutes down the road. So we leave the integration to Marty and Doc. Probably they have some experience going to the future. And coming back to everybody here, thanks a lot. All the best, and hopefully we are after this lockdown or whatever brings the winter, we are back to the future soon, healthy and more successful than ever. Thank you.
Thank you so much, Matthias Kern. Yeah, now we still have about 5 minutes left for questions. As I mentioned before, you can also just ask them in German, no problem. We can do both. And yeah, so now would be the time. And if you want, you can also talk. So just raise your hand. There is a sign, a reaction to raise your hand, and then I can allow you to speak as well. So, okay. Yeah, I mean, if there are no questions so far, maybe you can summarize like 5 reasons or like 5 the biggest advantages of a multi-brand franchising, maybe in German and in English then again, just to summarize it up. And ja.
Ja, ich kann, also in Deutsch vielleicht.
Genau, ja. Vielleicht in Deutsch eben, weil ich sehe, das sind viele Deutsche auch drinnen, also Deutschsprechende Zuhörer.
Ja, ich sag mal, hauptsächlich das Multibrand-Thema ist, sag ich mal, löst einige Probleme, die man eventuell hat, wenn man expandieren möchte. Wenn man jetzt, sag mal, klar, fängt man nicht mit Multibrand an, indem man einen Standort eröffnet mit einer Marke und dann den zweiten gleich mit der nächsten Marke. Aber irgendwann kommt man sicherlich an den Punkt, wo man eventuell nicht so schnell mit der Stammmarke wachsen kann. Das kann verschiedene Gründe haben. Das kann, sag ich mal, in der im Immobilienthema stecken. Das kann auch darin stecken, dass der Franchisegeber vielleicht bestimmte Gebiete restriktiv betrachtet, man also nicht genug Raum zum Wachsen hat. Und trotzdem hat man ein entsprechendes Overhead, was man führen muss, speziell in Finanzen, in HR, in anderen Bereichen. Und dann macht es durchaus Sinn, sich mal umzuschauen, was könnte denn eigentlich zu uns passen. Ja? Also im Food, ich bin jetzt nur aus dem Food-Sektor, aber es kann auch in anderen Branchen natürlich ganz gut sein, dass man einfach eine Marke findet und sagt, operativ haben wir eigentlich die gleichen Vorgehensweisen, wir haben die gleichen Wertschöpfungen, wir haben ähnliche P&Ls, also Gewinn- und Verlustrechnungen, die wir ähnliche Hebel im Kostenbereich, und dann macht es durchaus Sinn, eine zweite Marke dazuzunehmen. Zum einen leveraged man dann sein Overhead. Man führt natürlich die Marken markenspezifisch mit Spezialisten. Also es hat sich noch nie, sag ich mal, gut bewahrheitet, wenn, sag ich mal, ein Geschäftsführer vielleicht oder ein Operations Manager 2 verschiedene Marken gleichzeitig managt. Das geht meistens nicht gut. Man hat immer Spezialisten und immer eine Marke leidet dann darunter. Also im Operativen und im Marketing und auch sag ich mal, im Training würde ich dann letzten Endes immer markenspezifisch arbeiten. Aber die ganzen anderen Bereiche, egal ob Development oder HR und Finance und so weiter, da kann man schon gute Leverage-Effekte erzielen, weil man eben die Ressourcen besser auslastet. Und in dem Moment, wo es zu Investitionen kommt in Infrastruktur, egal ob IT oder Supply Chain Management, da sieht man dann auch ganz schnell, weil da geht es um Scale, also da geht es um Masse. Und wenn man die Masse nicht schnell genug schaffen kann, dann ist es meistens ganz gut, man sucht die zweite Marke dazu oder die dritte, je nachdem, wie schnell man da ist, und kann diese Systeme wesentlich besser auslasten und drückt dann insgesamt seinen Overhead-Anteil in der Gesamt-P&L dramatisch nach unten. Würde man selten erreichen mit einer Marke, denke ich mal. Es sei denn, man hat wirklich eine Marke, wo man Unlimited Development hat. Da sollte man sich dann schon auf die eine Marke konzentrieren. Also McDonald's ist zum Beispiel, die haben sich hauptsächlich immer auf McDonald's konzentriert und nichts anderes. Aber bei den meisten, gerade wenn man Franchisee ist, macht schon Sinn, wenn die Franchisegeber es erlauben, zusätzliche Marken dazuzunehmen, wenn man eine bestimmte Größe erreicht hat. Und eben, sagen wir, auf die Punkte, die wir vorhin hatten, so ein bisschen zu achten. Passt die Kultur? Ist die operative Plattform ähnlich? Und wie gut kann ich das integrieren? Ja.
Okay. Ja, super, danke schön. I think if there are any other questions which come up later, then, well, they can contact you on the booth of Pizza Hut, right? So, yeah, perfect. Yeah, then thank you, Matthias Kern, for the presentation. And yeah, we will see later on the booth, probably.
Thanks a lot.
Bye.
Have a good weekend. Bye-bye.
Bye.